Hello, everyone. This is Barry Melancon, and I'm here with Erik Asgeirsson, the CEO of our subsidiary, CPA.com, to speak to you about the Payroll Protection Program, PPP. What a couple of weeks, actually less than a couple of weeks as to this program. And we wanted to just spend a few minutes with you before we get into the weekend to just give you a little bit of perspective and context as to where the program is, what's happening, and what's likely to happen in the future. Erik, I know you have a lot of data points that are, I think, pretty interesting as to the enormity of this program and really how far it actually has come in a very short time.
Thanks, Barry. Yeah, the pace has just been incredible, and this understanding is developed through our ongoing discussions with the key stakeholders, the payroll processors, the banking community, and obviously the government officials. But just some quick perspective. It was 2 weeks ago that the CARES Act went into law, and then 10 days ago, on Tuesday, March 31st, the Treasury launched the forms and guidelines related to how we were going to execute the Paycheck Protection Program. And we were influential in kind of helping make it be a simple process, as simple as it could be, with those new forms. And then on Friday, April 3rd, it went live, but there actually was additional guidance that came out on Thursday night. So just the intensity of that week was incredible, and the firms, the banks, and the payroll processors were all working nonstop. And if you look at what has happened now over the past week, we're 7 days into this. The application has been live for 7 days. We have over 4,000 banks now accepting applications, and the SBA has actually received and processed over 500,000 applications from businesses, and the total value of that is over 140 billion as of last night. So just what has occurred is incredible. With that said, there absolutely have been some startup issues. We can get into that, but the magnitude here, another way to look at how significant this is. Last year, in 2019, SBA did around 30 billion in loans. They are doing about 30 billion in processing of loans every day now.
Right. It's incredible when you think about multiple, a year into one day. And it's really a very significant part. And we have another wave coming, Erik. We have now the notion of the 1099 earners, the gig workers, the Schedule C entities, and frankly, some lack of information related to that. You might want to just comment on that really quick, and also the notion of the lending environment. In other words, the additional sort of non-bank lenders and how that is evolving at this point in time.
Yeah, let me just discuss the lending environment first. Right now, we have 4,000 lenders accepting applications, and there's been issues here in how that has all occurred over the past week. And here's a couple of reasons why. There was only 2,000 approved SBA lenders. So these other banks that weren't previously an SBA lender have had to establish connection with the SBA's E-Tran system and other gateway lending systems. So they've been working hard at that. Secondly, the SBA has had to increase the capacity of their platforms. A few days ago, they brought in Amazon Web Services to support them with this effort. So those platforms are beginning to work more effectively. But there's two big things happening. One is, the SBA improving their throughput, and then secondly, the banks that were not SBA lenders understanding how to connect into the SBA. And then finally, there's this issue where banks are just accepting their existing customers. One of the big reasons behind that is because of the anti-money laundering, the AML rules. So that's why the banks are primarily just taking existing customers. But your final point that you raised was about alternative lenders, and there are alternative lenders coming on, and that's going to help firms, get their clients connected with other lending mechanisms.
Right. I think that's going to be very important, the alternative lenders for the sole proprietors, the Schedule C individuals, and the individuals that are 1099, because they may not have a commercial banking relationship. And the alternative lenders gives us sort of another opportunity to how to connect those individuals and be able to take advantage of the PPP program. Now, one of the things that I think we need to do, one of the things that I personally need to help everybody with on this, is to just sort of think about a little broader and longer term on a few issues. So everyone is just moving, a million miles an hour. You're moving a million miles an hour for your clients. You're moving a million miles an hour trying to work with banks. The banks are all moving very fast. The government is trying to move very fast. I do think there is a question that you just need to put into your risk management discussions with the clients that you have. And that is, it is a self-assessment of need. Ultimately, there is going to be a period of time when people look back at this. We're looking forward today. But we also know that history tells us that some point in the future, it may be 2 years, it may be a year and a half, people will look back at this program. That's why the banks are very concerned with the anti-money laundering issues, as an example. Well, what things should we be thinking about as CPA professionals? And one of those is that when we advise clients in that trusted advisor role, we always talk about risk. And part of the risk is a public image risk. It's very easy in this notion of self-designation that I've been injured, to say, for a business person to say I've been injured. If you're a restaurant that's closed, it's a no-brainer, right? But what we will know is that a lot of this is going to become public. Who gets these loans? Who really thought they were hurt, et cetera. And I think some entities that are mainstays in their communities, you need to help people think through that 2 years from now. It's going to be public at some point. Do you want to be an entity that was deemed to have been hurt, depending on what type of industry that you're in? I'm not saying that should thwart you from taking advantage legitimately of this program. People should take advantage of it legitimately. But I just think you need to that's one more thing you need to be having that conversation with, which actually leads me to the issue of agents or agencies. We've gotten just an enormous amount of questions on the issue of what characterizes a CPA as an agent, or should they be. We've put out a one-page set of guidance related to that. That guidance is very easy to understand. What we say is you can be an agent. If you're an agent, that means the funding comes to the entity, the firm, from the bank fee. That means you have to have a relationship with that bank. You have to enter into an engagement letter. You have to make sure that they're willing to pay that particular fee. But we've also made it clear that it is okay for firms to be engaged in advisory services with their clients, and clients to be paying them to go through all of this decision-making process. And there's another factor to consider. If you sign in as an agent, or if you sign on as an agent, in almost all cases, it's probably going to affect your independence. And so if that client is a client in which you are issuing independence type of engagements, then that's a factor for you to consider. So we have done nothing to say you cannot be an agent, but we've put the information out there for you to think about as you go through that process. We've also, for those who are insured through our professional liability program, there's a risk alert that's been published in that area as well. Just different things you want to think about if you, in fact, go down the agent route. Now, the last point I want to cover, and then I'll turn it back to you, Erik, to talk about SBA in general, is the loan forgiveness part. And you can comment on this as well, Erik. But I guess my number one message to you is we will shift soon to the loan forgiveness point. Hopefully, when we get a little bit of stabilization as to the application process, we'll be able to put our resources into that direction, work with the SBA to give clarity of exactly how the loan forgiveness part will actually work. We know the intent. The intent is for it to be liberal, but we also know when you read all the rules, you can get into some mechanical, mathematical questions. And believe me, we've seen those from members. And I would just ask a bit of patience. We will get to that well before the end of the 8-week period so that you can advise your clients. We're going to work very directly with the SBA, which same thing we've done with Treasury. For instance, on the tax deadline issue, we've pushed very hard to give clarity in that space, clarity to the banks, clarity that the SBA is going to use, and clarity that we can share with you so that you can advise your clients effectively. Erik, some thoughts on that, and as well as the SBA overall.
What we're trying to do, both with the application and the loan forgiveness, is to build a common approach to get everybody on the same page. And if you look at what we've done around the application, there's two key areas. What are the required documents needed, and how do you do the calculation? And we worked hard on the gross payroll element, and there was involvement with our overall coalition, and we provided feedback to the policymakers on that. And then everybody now has agreed on what the gross payroll approach should be. Where we are right now with the lending documents is we're trying to put consistency in place. There's been a lot of applications that have already been processed, but there's still a lot of businesses, a lot of independent contractors that are going to have to be submitting those applications. And we're working with the payroll processors and the banks to build a common approach, get everybody on the same page with what is being requested and also how those calculations are being done. And we put out some documents related to that. So then that will be consistent with how we go about thinking about loan forgiveness, is getting the SBA in particular and in the Treasury to help us build this consistency in the marketplace. And the firms are just playing such a significant role. They're guiding the clients on what option of business relief is the right one. There are many different SBA programs. We're talking primarily here about the Paycheck Protection Program, but there's disaster relief loans and other things. So the firms driving what is the right option, then the firms working with those other stakeholders, the lenders and the data collectors, the payroll processors, to gather that information, do it in a consistent manner, and get the money to the businesses, and then get these loans forgiven. So that's we're just working every day at that. We're connecting to all these different groups, and everyone has got really good intentions. And at times there are frustrations we're hearing from our firms and from the small business clients, and that's understandable because there's just a lot of pressure in the system. I mean, the numbers are, there's 17 million, 16 or 17 million unemployment claims in the last couple of weeks. So our firms are realizing that with their clients. So I think that's our overall approach here, is just to build a common approach with the government officials and with these other stakeholders.
Just a word on the funding for this program. As you know, and Erik shared the data early on about how many loans have been applied for and how much funding the SBA is doing. But I think we need to think about this in the context of what Congress is likely to do for additional funding. The fact of the matter is that when we started down this process, we focused on the private business sector, the so-called bailout of the private business sector, as a critical component. It is a critical component. It is going to be the key to starting up the economy. We all know how powerful small businesses are in our economy, and each of the CPA firms in this country and many of the CPAs who work in companies work in those small and medium-sized enterprises. The President, President Trump, Secretary Mnuchin, all the congressional leaders have said that they are supportive of additional funding for this program. That shows how important it is because of the demand about it. And even if you say, well, it's been a little shaky getting started, it's actually been a success story about how much interest there is and how much importance there is. And in fact, I think that what we can assume is that Congress will put additional funding. Both houses of Congress are home right now. And so I think they see this as a way to show the American public that they can act through procedures that the Congress has. Let us hope that that will be the case. We think it will be the case. When we started this journey, we made a decision here at the AICPA that the focus needed to be on small business. And we made that decision because small business will be so critical to the restart of our economy. And I think the popularity of the success, really, even with all of the confusion, as Erik talked about, but the just sheer volume that's actually going through in 1 week, I would say that's a success overall. The success of this, I think, clearly shows that there will be additional steps that need to take place in this area. And so I think we all need to remember, we're all small business advisors. That's what our profession does. This is critical to the restart of the economy. It's a critical role, maybe the most critical role going on right now, other than the medical frontline people that are working on the health side. And so we will see some additional steps in that process. We'll see additional funding. There are, as Erik said, millions of small businesses. They're in every congressional district, obviously in every state, and it will continue to be addressed from that standpoint. We feel pretty confident of that. And so I think that's a very important point to bear in mind as we put context for clients and the profession in this space. Let me just also say, you have questions. We're trying to answer those questions. We have put additional resources in place to answer those questions. We have a chat feature that allows our team to answer many questions at the same time. It's on aicpa.org/COVID-19tax. You can do chat from that standpoint. We have people trying to answer those questions. If you think there's a question we may not know about that you want us to be putting on the list, you can certainly offer it from that standpoint. There's a call-in process to our main line as well, and it's hit 0, and it gets you right into the people that are trying to answer these questions. So the chat probably is the most efficient way, but there is also a call-in number. So I think that it's really a really critical component for us to have that context. I also didn't go into the tax deadline issue. I do want to acknowledge our team. Our team has been fantastic on the PPP area, but our team was also fantastic on the tax relief. It was a generic relief that happened last night after we issued correspondence calling for the very specific and simple approach to deal with all the deadlines. So we were real happy with that outcome. So with that in mind, this is a holiday weekend for most of us, people who celebrate Passover and Easter. We want to wish you a great holiday. This is a strenuous and stressful time for everyone. And obviously, health is the most important part. So for both Erik and I, thank you for listening to this. And we look forward to keeping you up to date as this program will inevitably evolve in the days and weeks to come. Thank you.